right, first up on the show, Haber, which is a leading industrial AI startup. They've raised $44 million in a Series C funding round. Vipin Raghavan is the co-founder and CEO of Haber, who now joins in on the show. Thanks so much for taking time out. Let's begin with what exactly you'd be using these funds for.
Hi, Avani. Thanks for having me. Before I talk about the funds, just talk a little bit about what we do. So we're an industrial AI startup. We started in 2017. And before I talk about the products, just talk a little bit about our customers. So our customers are what I call process manufacturing. So think about pulp, paper, packaging, metal industries like steel, food and beverage processing industries like dairy, pharmaceuticals, so on and so forth. We've chosen to focus on the pulp, paper, and packaging industry. Most of our customers are in that space. So that industry is seeing a lot of demand for their products, driven by quick commerce, driven by food delivery, and also driven by a desire for more sustainable products. So a lot of single-use packaging is now moving to paper-based packaging. So paper is a very sustainable product. It's recycled about 10 times, right? So the average carton box that you get from Amazon or Flipkart is 90% recycled. So that industry is seeing a lot of demand, but it's also facing a lot of challenges. And these challenges are not just unique to the packaging and paper industry, but also span across all of process manufacturing. There are three trends, global trends, that are driving the need for AI in this industry. The first one being average operator tenure. So these are the folks who are running these plants. These plants are 24/7, 365-day plants run by operators, right? So the average operator tenure has decreased. Before the pandemic, it used to be in the high teens, 17, 18 years of average tenure, to now it's in the low single digits, less than 5 years. So significant decline in the experience of the operator. The second one is the end markets are demanding for different grades of product. So they are continuously having to switch over between different grades. So they are making, what used to be, they would have like 15-day runs of one type of grade. Today, every few hours, they are switching from one grade to a different grade of product. So this creates challenges. And the third one is the raw materials, right? So the raw materials that they're getting are increasingly changing in their characteristics. So these three things are driving the demand for AI, and how our products are solving for that is these operators who are more junior in nature, they're able to perform like a very experienced subject matter expert by using AI tools, right?
So I understand that you're working with innovative AI-driven solutions. How exactly does it work? Which industries are you catering to?
Yeah, so these are quite resource intense industries. So they, quite raw material intense, quite energy intense, and quite water intense. So one of the things that our product does by taking real-time decisions is helping these factories reduce their water and energy footprint. To start with, they are very, very sustainable industries. We're helping them become even more sustainable, right? Reducing that energy footprint even more, reducing the carbon footprint even more. And the way we are doing that is simply by making more smarter decisions, automated decisions in real time. For example, when they change from one grade of product to another grade of product, let's say they have 4 hours of downtime, by reducing their changeover time, right? We're helping them get more efficient, saving a lot of water and a lot of energy in that process.
And what does your portfolio currently include?
Yeah, so we have 3 unique products, right? So, and geographically, we are spread across the subcontinent, India, Bangladesh, Sri Lanka, and then Middle East and Africa, and now more recently in the Americas as well. So one major thing that we're going to invest in is the go-to-market in the Americas, so North America as well as South America. So that's our geographical spread. Like I said, we have three unique products. One is a hardware product that samples the raw material and analyzes and takes decisions in real time. And the other two are AI-driven software products that are used for planning and that are used for, again, making different decisions in the plant on a real-time basis.
And what about financials? Because there has been about an 80% jump in revenue, although your losses have widened quite significantly. So what's the outlook on your financial metrics?
Yes. So our customers today, if the alternate to what we are offering them, if they had to get an alternate, they'd have to stitch it together from multiple vendors, right? At least 3 to 4 vendors, and they get a fifth vendor to kind of coordinate between these 3 to 4 vendors. So we have built the entire tech stack within our product. So the APIs that translate the data from the plant to usable data, that's our own technology. The hardware that integrates with these factories, that's our own tech, right? And then the software and the AI that sits on top of it, which is the core part of our product. So that's all ours. So in one package, our customers are able to get a real solution that delivers value versus having to go to multiple vendors and stitching together a solution, right? So there are American and European companies that are trying to offer similar solutions, but today you'd have to go to multiple vendors to get something similar.
And who are the top competitors, and how do you plan to take on your competition?
Yeah, so we sign long-term contracts with our customers. We measure ourselves on annual recurring revenue. So that's the metric that we look at. And then when we look at retention and customer acquisition costs, right? Our strongest metric is customer retention. We have never lost a customer, right? So once we are at a customer, we are able to further expand. And that opportunity of expansion comes from these companies having multiple production lines. So we go and start with one production line, and then we expand to the second one, the third one, fourth one. So there's a lot of room to land and then expand within these customers, right? So our strongest metric is something called net revenue retention, which is how much we are not just retaining customers, but also expanding within our existing customer base. So we started in 2017. We started very small. Today, over the last couple of years, we have more than tripled our annual recurring revenue rate, right? And we have gone to new geographies as well, North America being the big one that we recently went into.
Good speaking with you. Thank you so much for joining in. Let's get a...
If you like this video, then like, share and subscribe to ET Now.